Welcome back, everyone. If you're just joining us, I'm Gordon Bacon of the Canadian Special Crop Association, and you've tuned in just in time to listen to the pea market outlook analyst and a panel discussion. Similar to our earlier market outlook presentations, we'll have Chuck Penner give us an outlook, and then we'll be joined by panelists to discuss their views of the pea market. Again, I want to ask all of you to use the question and answer function. We would prefer that over the chat function. So if there's time, we'll be able to go to those questions and answers and address some of those by the panelists. Our pea market outlook session is generously and graciously sponsored by the Port of Montreal. I want to welcome back for a third time Chuck Penner, our analyst and of Left Field Commodity Research. And Chuck, I will turn it over to you, and away we go on the pea outlook.
Thank you, Gordon. It's good to be back again, at least for me. I hope people aren't getting really tired of seeing me, but we're going to jump into the field pea outlook now. And really, when we look at what's going on with respect to peas, we're seeing a situation where there had been expectations earlier, or ideas earlier, about a number of months ago, that we were in a situation of extremely heavy supplies, and that the market was just going to be relatively stagnant. And that certainly hasn't been the case. And the other part is, as always is the case with respect to peas, is we need to look at it in terms of the various classes, and especially the two major classes, yellows and greens, because the situation and the outlook is very different for the two of them. So we're going to jump into that. When we look at the Canadian pea crop, StatsCan just issued a new set of estimates yesterday, and they had put out the previous ones 2 weeks earlier, but the ones yesterday put the crop at just under 4.4 million tons. The previous estimates from 2 weeks ago had been closer to 5 million tons. And so they came down significantly from those earlier estimates. So that's the total picture, and in here we see we see the numbers, or we see the various classes stacked one on top of each other. But when we break them out, this is where it becomes a little more, at least to me, it becomes more interesting. So in this case, based on some acreage numbers that StatsCan put out in June for the various classes, there are very good odds that the yellow pea crop could actually be, the 2020 crop could actually be down from last year. So not that increase that we had seen, but for green peas, we're sending very favorable market signals to farmers. And so that acreage went up significantly. And so we're seeing that particular class, the production outlook, probably going up by about 25%. And then some of the minors, especially the maples, also some increases there. And I don't have the numbers offhand. When we look at the situation with those two crops, or those crops of greens and yellows, what we can also see is that going into 2020-21 is that the carryover supplies were extremely low. And so even with an increase in the total crop size, the supplies are going to remain roughly steady with where they were in 2019-20. And so again, heavier supply outlook for greens, and thinner supplies, lighter supplies of yellow peas. So again, very different type of scenario for those two major classes. So that's from a price perspective, that's a friendly type of an environment. When we look at exports in this last year, we ended up at just a little over 3.7 million tons of exports. And if we look back over the last number of years, Canada kind of had its glory year in 2016-17, and where we hit almost 4 million tons of exports. But compared to some of the expectations earlier in this year, or this past year we just finished, the 3.7 was an extremely strong performance. Now, what you can also see in this chart is that up until 2016-17, India was the largest buyer, and they drove most of that increase in volumes. But since then, India, of course, has nearly dropped out of the Canadian pea export picture entirely. There have been a few that have managed to trickle into the country, and including some greens, but to a large degree, that's a situation where China has become even more dominant than India was at its peak. So now the market has really shifted where those peas are going. And for 2020-21, there's probably stronger demand than what is shown on this export chart, but I don't know that supplies are going to be available to allow an increase in exports next year. And again, this is taking into account that exports to India would be minimal. So not counting on India at all. In terms of the US crop, it's the same type of a situation as in Canada, where the strong green pea prices boosted a green pea acreage, while yellow acreage dropped off. And so based on some USDA production or yield numbers last week, we see that the yellow pea crop could drop in the US by as much as 30%, while the green pea crop would be up 10 or 12%, so somewhere in that ballpark. So again, very different responses. In terms of major pea production, I actually didn't get a chance to revise this chart, but what we see is that steady to lower production in a number of the major exporters. And now I would also show a small reduction in the Russian crop, somewhere around 2.2 million tons compared to 2.4, 2.5 last year. So smaller crop in the US, smaller crop in Russia, smaller crop in Ukraine, bigger crop in Australia. But overall, a fairly steady to maybe lower production outlook. In terms of the Chinese demand, so this chart shows their production levels over the last number of years, and then in red are the imports. And so my question for this year is, we know that China, for a large number of its crops, experienced some severe issues with flooding, and so there were some real crop losses. And we don't know, though, because there's just lack of information, what that has done to their own domestic pea production, which usually hovers around 1.5 million tons. So what if their production has gone down, what does that mean for their demand situation, their import requirements for rest of 2020 and into 2021? I think it could be even larger yet. In terms of their imports, even prior to that, those issues with their own crop, they've been running. China has been running at a record import pace by a large margin over anything previously. So 7 months into the year, China has imported already nearly 1.5 million tons, whereas the previous records for full year were in and around 2 million tons. And so far anyway, Canada has accounted for roughly in excess of 95% of Chinese pea imports. And there aren't a whole lot of other sources, at least in this year, with production declining in a number of these countries. In terms of domestic use or total usage of Canadian peas, domestic use has been relatively small. And again, some of the history on these, some of the history are StatsCan numbers. So they're somewhat questionable in terms of their exact level, but the domestic use includes feed, includes processing, and also that's largely a degree. For 2020-21, we're finally starting to see that yellow bar growing wider again, but on a more sustainable basis. When it was large in previous years, to a significant degree, that was related to low quality crops when a lot of it went into the feed channel. So now with some expansions going on in domestic processing, those facilities will be coming on stream later in 2021. So we'll start to see that increase going there. In terms of just a couple of other bits of information about some of the other products. These are Canadian pulse flour exports, so not just peas, would include chickpeas and a small amount of lentils as well. Canada used to be a very large exporter or a larger exporter of those, but China was the largest buyer, and with increased production capacity, processing capacity in China, they've largely disappeared. Most of that business remains to the US, and that's been more or less steady in the over the last couple of years. In terms of U.S. Imports of protein isolates, and again, this is not strictly peas and it's not even strictly pulse isolates, but there has been a fairly sharp increase in U.S. imports of protein isolates, and that includes from China, but also a number of other suppliers such as France and even some other countries. But unfortunately, I'm not able to split out which of those are peas or which of those are pulses. In terms of Canadian ending stocks, this year considerably or have continued to decline in the year we just finished, and expecting to do that again this next year. And what it looks like those ending stocks for next year will be heavier on greens and not as heavy on yellows. Just in terms of a bit of a longer term outlook, and so the way that things have been shaping up, the darker bar is, or darker line is considered production, and the lower is exports. And as domestic use increases in Canada, what we'll see is production continue to trend higher, but there will be less available for the export market because of the stronger demand from domestic use. And so that will be an adjustment that the world markets, world producers and importers will need to sort through. Just in terms of a few price indications, pea prices in India have spiked higher, especially for greens. And in fact, greens are not even being quoted anymore. And now the production increase, or the price increase, as we see, is occurring with yellows as well too. And even in the latest week, prices for yellows have gone up. Now the difficulty is that those prices can be sky high, and yet the world market, because of the quantitative import restrictions, can't participate in that market at all. So it is a signal, though, that supplies are already dwindling, and not just for peas, but also for desi chickpeas too. So this next chart shows prices in India for desi chickpeas, and also for yellow peas in Kanpur. And what I want to point out here is that the yellow pea prices have certainly risen as imports are restricted, but now even the desi chickpea side of the market, which had been limiting import requirements of peas and of desi chickpeas to some degree, it's now at the highest point since, it doesn't even show on this chart, but since I believe sometime in 2017. So we're at these highs now in the market. And I don't know that the Indian government is going to make a move anytime soon with the Rabi planting starting to approach in a couple of months. But it is a signal that the heavy stocks that were being carried over have now been exhausted. And so there is some potential for India to relax its import restrictions, either on desi chickpeas or on yellow peas, or both. But I would suggest probably starting with desi chickpeas. But that has the potential to be a game changer. Part of it will also depend on how farmers in India respond with their Rabi plantings, and whether these higher prices will trigger larger plantings. Even aside from the important part in this chart too is that Indian desi chickpea prices have now, for the first time in a long time, risen above the minimum support price. So again, the market is showing these signals. It's not necessarily an artificial signal driven by the minimum support prices. In terms of some prices in China, what we see here is that the relatively comfortable green pea supplies that we're expecting have weighed very heavily. We had very tight supplies late in 2019-20, so that drove up those prices. Then when the market transitioned from old crop into new crop price levels, we saw that sharp drop off, and they've since tailed off even a little bit more from those levels. So we see that gap between greens and yellows narrowing, but still historically fairly wide. What we're also seeing, though, is for yellow pea prices in China that we're coming off of those lows and we're starting to move higher. And part of that is simply related to seasonal factors here in Western Canada, but also it may be related to some increased need from China for imported peas. In terms of prices here in Western Canada to the farmer, so we're now through the point, or we're at the point, I would suggest, we're at the lows for the season. And in fact, there are signals, and more so for yellows than for greens, that we're coming out the other side already. So we're starting to move higher. And the seasonal price tendencies, the price patterns show that around mid-September, which is where we're at right now, that's when prices for both yellows and for green peas start to turn higher, and then they'll trend higher probably until late November, go sideways for a little while, and then the seasonal price pattern tends to move higher again through late winter. So that's so a lot of the movement that we've seen has simply been regular seasonal behavior of prices dropping through the summer. And of course, because green peas were so elevated previously, that size of that transition has been much larger. So that's the Canadian pea price situation. And then just to highlight a few of the overall summary comments. So we have Canadian production up just slightly, but considerably more for greens than for yellows. And in fact, the yellow pea crop might actually be down. A disappointing pea crop in Ukraine and also in Russia. It's not shown there, but the Russian crop also, some reports out of there, some contacts have told me that yields were down there significantly because of drought situations. Chinese demand has been growing, and it's been growing year on year, not just this year, but almost every year that demand has been moving higher. And now there's some question about their own domestic crop and whether that could give an extra boost to their demand in 2021. India is out of the market for now, and I don't know what kind of odds I would put on India re-entering the pea market. Possibly more so in the Desi chickpea side, and then possibly later. And to me, that's that would be the tipping point, or would be a large inflection point for the yellow pea market, is whether India decides. I'm fairly friendly toward prices for 2021, and that's without India in the market. And if India came in and even took 500,000 tons out of Canadian peas, or peas from the US or wherever, that would change that supply and demand situation very, very heavily. And it would be a very sharp increase. But I don't know what those, I don't know what kind of odds I would put on India's re-entry into the pea market in 2021. It's possible though, especially if the weather does not cooperate there. Canadian domestic processing is going to be ramping up in the third quarter of 2021. And so that will see some increased use going in that direction. And I think there's some longer term positive signals there as well too. And so what we have is a tighter supply situation for yellows, a little more comfortable for greens. And so I think we'll see that gap between green and yellow pea prices could narrow even further during this year, either through yellow pea prices rising or for green pea prices coming down a little bit more. So those are the comments that I had, and I look forward to seeing what the panel has to say in terms of some color commentary beyond just the numbers and beyond my own opinions. So at this point, I will turn it over to our moderator.
Thank you, Chuck. It appears we have some technical difficulties with the video side of things, but hopefully the audio is going to work here and the video will work for the rest of the panelists. Thank you for that very detailed presentation. Hello, everyone. My name is Quentin Stewart, and I am pleased to be your moderator for our final panel discussion of the day. For those of you who don't know me, I'm a senior commodity trader with Viterra based in Regina, Saskatchewan. I also have the honor of serving as the current president of the Canadian Special Crops Association. Let me now introduce to you to our panelists. Rav Kapoor is the CEO of ETG Commodities, Inc., the Canadian wing of an international agriculture supply chain company that operates in 40 countries. and one of our sponsors for this convention. Welcome, Rav. Kevin Price is a senior export merchant with Parrish and Heimbecker based out of Vancouver, BC. Thanks for being here, Kevin. Jeff Vipond is the general manager of Pulses and Seed Distilling and Milling for Schooler Canada. He's coming to us today from Calgary, Alberta. Hi, Jeff. Good to have three of you with us today, and we're very lucky to have the wealth of knowledge and experience on this panel. I want to start off with the supply side of the equation here. Chuck obviously gave a lot of details about StatsCan reports and yields and some projections, and including a reduction or significant reduction and adjustment in the reports here in the last week. Jeff, can you give us some details on how you see harvest progressing, what you see with yields, and how you see the grower selling?
Yeah, thanks, Quentin. And I'd like to also thank Chuck for the presentation. I thought you did a great job. In terms of the outlook, obviously, it was, I'd say, a bit of a surprise to see the significant adjustment from StatsCan this week, but yields have been drastically, all over the place as we saw production estimates come in from our growers and from Western Canada. So it's not surprising that there's a little bit of unknown out there. But I won't dispute what's in Chuck's presentation. I think it's the best information we have today for production on yellow peas and green peas. When I turn to the marketing aspect of it, we heard the panelists in the last session talk about the strength of the Western Canadian farmer. And I think the Western Canadian farmer is in a pretty good position this year. We coming off rather low carryout stocks on a number of the major commodities that are produced in Western Canada, and obviously pulses went end of the crop year with very low stocks. The producer saw strong prices from, frankly, March through until they cleaned out their bins. They were seeing the market move higher, and they saw some good opportunities to forward market new crop production on lentils, as an example, strong new crop lentil prices. So the farmer, he's in a pretty good cash position today from all information we're receiving and from the action that we're seeing from the producer. They're not eager to market. They're holding tight and they're waiting for their values. So you look back a year ago, Quentin, we were buying, the market was bidding yellow pea values sub $6 a bushel. Now the grower sitting here today, a stock situation that's rather similar to a year ago, and we're starting to push the envelope of $7 a bushel already on yellow peas. So you can see the strength in the farmer being able to hold for his price. So I think I would agree with Chuck's statement that when we look at yellow peas, that the lows of the market, we've probably seen them. And it's going to be an interesting path forward if the demand comes to fruition, as it looks like. China continuing to buy at a steady pace. So, the farmer has seen good movement on yellow peas. They've got an optionality on when they want to move it, and they're in a good cash position. So, yeah, it's going to be an interesting move forward. I'd probably be a little bit less optimistic on the green peas. I think the green pea grower has been able to hold fast and keep that value a little bit higher than maybe it should be given the stock situation. Whether you believe that acres are up 10% or 30%, with India, Nepal out of the market, it feels like that green pea situation is going to be rather heavy, at least out of the gates here. But values, if you're going to pull green peas out of the bins, you're still paying up for them. So we could see, I wouldn't be surprised to see that market trend a little bit lower as we move forward, but I wouldn't bet against the Canadian producer today.
And what percentage of yellow peas do you believe the grower has sold already or marketed?
Our estimate today, Quentin, we'd have them at about 1/3 sold.
Okay. And how would you expect them to be sold, say, by the December 31st?
I think they'll move in increments. As the market moves higher, they'll sell into that. I don't think they're going to be eager to sell if they see values lower than that don't start with a 7. I don't think they're going to engage. If the market starts to move up in increments, we could see this market 50% sold by December.
Right. Thank you for your comments, Jeff. Moving over to Kevin and a little bit on the demand side. Obviously, Chuck portrayed very well the significant increase in exports to China, over 2 million tons based on StatsCan estimates last year. What do you forecast the demand picture looking like for this year? And secondly, how do you see the Canadian capacity situation, both rail, intermodal, container, and bulk vessel logistics playing out here over the next few months, keeping in mind there's also strong demand for other competing commodities, not just pulses?
Right. Thank you, Quentin. And thank you, Chuck, for the great presentation. When you talk about China, you talk about really two types of demand. You get the traditional core demand, which is the frac and pigeon feed and traditional demand, which is, right now roughly growing into 1.2 million metric tons. The new demand that we've been seeing the last couple of years have come from the compound feeders. That's the new story. They have massive potential demand, but as we know, they're directly affected by the corn and soy complex. We feel that despite, we've seen a lot of vessels come through Vancouver here in the last 3 or 4 months. We feel despite that we will quiet down over the next 6 to 8 months and get it to more of a steady pace until there's, essentially no stocks left at the end of the year. Exporters have a tendency to discount harvest positions, so that's part of the reason why there's such a big, large front-loaded demand on right now. So it will slow down and give a chance for China to absorb some of those stocks going into the winter. I want to note, though, that the compound feed buyers, despite having potentially bottomless demand potential, they are sensitive to value and can and will trim purchases once the value for the protein threshold is crossed. So growers' prices cannot necessarily run exponentially, so they have to stay within a workable range. And of course, the CAD, the FX has a huge part of our daily trade. You move 1 or 2 points within a week or two, it's the difference in making business or not into that market. So overall, we feel that 2.3, 2.4 million metric tons, is possible for this year. Certainly an increase over last year's, simply just because of the the strong demand we have off the hop. So
you referenced the threshold between those other feedstuffs and corn and soybean meal in particular. Where do you see that threshold being, and what is the upside to that in your view?
Yeah, that's a good question, sir. It's a little bit outside of my experience in terms of where those. We try to track some of those values, and there's such a moving target. Last year we were seeing values of over $300 into China. This year we're in the mid 270s, I suppose. So as there's going to be can they pay more? Certainly they can. So that's a question. One point to note, though, that the traditional frac users are under purchased right now. The core frac buyers. So whether or not that some of the feed buyers will move over and sell some of that into the traditional frac market, that's still something to be seen. But they're certainly underbought for this time of year.
Okay, and then just on the West Coast supply, obviously a large percentage of that feed and frac demand is covered off with bulk vessel shipments. How do you see West Coast flobbing capacity here for Q4 and Q1 of 2021?
Right. Well, this is the $1 million question, a question we talk about every day within our office here. There's, at least on paper, there's an additional 14 to 15 million metric tons of capacity either online or coming online in this crop year. So that historical West Coast bottleneck, should, at least in theory, be alleviated. But with the higher Western crop, with the bigger Western crop, the additional inland terminal capacity onboarding, and moving of that West Coast draw further to the east, not as much as we were initially projecting. So certainly the next 6 months of shipping is going to be a pretty significant challenge out here. The question on everyone's mind is that we have all this new capacity out on the West Coast. We have all this increased capacity in the prairies. We have this huge crop, and despite all the network upgrades and logistical efficiencies that both CN and CP have realized over the last few years, how will the rail logistics play out? That is the biggest question for us when we're under this new environment.
All right, thanks, Kevin. Shifting over to Rav on the Indian policy side of things. Obviously, the Canadian market has effectively been shut out, as are a number of other origins. How do you see the Indian government policy playing out here over the next 3 to 6 months? Do you see any changes as they approach food security and the need to manage inflation over the next 3 to 6 months?
Thanks, Quentin. And again, thanks, Chuck, for a great presentation. We are getting into the Rabi seeding into India, and there was a surprise, and Czech very well pointed out that the price of desi chickpeas has started moving up. So desi chickpeas and yellow peas, as everyone on this panel and the attendees would know, are very correlated. They thought they had close to 10 million tons of desi chickpeas, but they're just now realizing that it's that number was incorrect. It was to the tune of 7 to 7.5. They did have a decent yellow pea crop in March, so that has been consumed through the market. Now, going into the Rabi seeding with higher prices, I think we'll see a spike in desi chickpea seeding. And what we have been hearing on the ground is a lot of lentil producing regions might move to growing yellow peas. A, it's an easier crop to grow versus lentils. B, the price of yellow peas has kept higher than lentils for the last almost 2.5 years. And C, yellow peas is just a very sensitive political situation in India. And in the last 9 months, we have seen whatever cargo was shipped in last November, December has been stuck in the port. And the government is pretty adamant that they are not going to let this cargo come in. And most probably what it's looking like that part of that cargo will be re-exported into India, into other countries besides India, maybe to Bangladesh, Pakistan, or if prices in China keep hovering up, some of that cargo from the special economic zone in Mundra might be re-exported into these countries. So we might, I don't want to be sounding a little bit pessimist here, but you might see about 150,000 tons of cargo come into the international market out of that exports. The other flip side of the coin is, let's say they want food security and they open up imports for November, December arrivals into India for peas. I think Black Sea has enough peas available at a discount and with a shorter transit time to get into India. Just because of the price sensitivity, if that was to happen, which I think the probability is less than 5%, but there has been a lot of rumors and there have been a lot of talks that they might just open it for 2 months and shut it out after December 31st. If that was to happen, I think Black Sea peas are going to be the first one to go in, and Canadian peas are going to come behind. What we saw last year in 2019, especially in August, September, October, was a lot of cargo which was going into Bangladesh and going into Dubai was being loaded out of Canada as the final destination, but was getting diverted to India, which was pretty much 200,000-300,000 tons. If you take 2019 crop, if you take 2018 crop, I think they took about 400,000-500,000 tons of product in, which is non-existent this year. And it does not look like that India is going to come into the market and open imports.
And if they were, would you believe that it would be done through a quota system similar to other commodities?
Anything going into India till we have the current political government in place is going to be done through a quota system, no matter it's peas, no matter it's pigeon peas or some other commodities. They're even thinking of putting lentils under a quota system, which is still against the rumor. But coming back to peas, if it's going to happen, I think they might open up a 200,000-300,000 ton quota or 500,000 ton quota, or they might just open the imports for anything arriving before December 31st and shut it off after that.
All right, thank you, Raf, for that insight. Jeff, we'll come back to you. We have a question from the audience asking about the spread between green peas and yellow peas. How do you see that spread transitioning here through the crop year?
Yeah, that's an interesting one, and one that we've talked about a number of times as we headed into the fall harvest season. You know, if the demand outlook for green peas stays as we see it now, and there isn't a change in that India market, that we don't see demand come out of one of those key destination markets for green peas to swallow up some of this excess production that we have, I think there's a real possibility that we get to parity between yellows and greens. I'm not saying it'll stay there, but I think there could be a time during this crop season that if yellow pea demand stays where it is and lackluster green pea demand stays, that we see that narrow in.
All right, thanks, Jeff. Another question from the audience. How do you see the demand picture playing out on the Bangladesh side of things, Rav?
Sorry, I was on mute. I think the demand from Bangladesh has been consistently growing due to some of the peas getting into India through the border, and that's open. That's information is open and everybody knows about it. I think due to COVID and due to Corona, borders have been very tight, and that movement of cargo has been restricted to some extent. I would be surprised that if the tonnages which was moving for the last year into Bangladesh keep up, we might see a decline of 100 to 150,000 tons from for the coming marketing year.
So you see good stocks at destination currently in Bangladesh?
We see decent stocks, but most of the stocks, Quinton, as you might know, were moving into the border, the regions into India, the border regions around Bangladesh into India, which has been halted for the last 2-3 months. Now, if that stock keeps on moving on a continuous basis and that opens up, then of course there will be pent-up demand from Bangladesh. But if not, then there are enough stocks in Bangladesh as of now.
Thanks, Rav. Jeff, back to you. Looking more on the U.S. side of things and the pet food market and destination. Obviously, we heard Colin and the CHICKPEA panel discuss about the reductions in exports. If you just go by StatsCan, Canadian exports to the U.S. were down by about 50%. What are you hearing from your customers on the pet food side and their potential future usage here in the next crop year?
Yeah, I would say the dialogue that we're having is the demand is still there. But I would say as a primarily Canadian origination focused company like Schooler is when it comes on the pulse side of things, that the US pea crop, it's tough to compete with today. That Chuck talked about the production in the U.S. and although it's down on the pea front, there's still a material crop there to service that domestic demand. So we don't see the pulse demand shrinking into that pet food market, but we see it more competitive for Canadian pulses to try work its way south, just given the domestic production that's there.
Okay, and I guess I don't necessarily have any specific panelists in mind here, so feel free to jump in as you wish, but we heard other presentations on plant-based proteins. We talked in Chuck's presentation about some growth in infrastructure in the Canadian market with Rocket coming online and a few others. Do you see that having a material impact on consumption in this crop year, or is that something more for the future? Don't all jump at once.
Yeah, again, I think Chuck alluded to it that the consumption patterns are slowly coming on. What we are seeing though is in our country elevators is that we're starting to see the protein bids being referenced more as opposed to the competitor bids down the road. And sometimes the prices are getting muddled by different types of incentives, whether it's protein or glyphosate free and other things. So we are starting to see an impact on our ability to purchase in the country by their bids. I don't know, Jeff or Rob, if you can concur to that or not.
I don't see them disagreeing. So going on to another audience question here. What do you expect for import demand from Pakistan? Maybe for you, Rob, and how do you see Black Sea selling into that destination?
I think there's Pakistan has consistent supply and they've been receiving consistent supply from Ukraine and Russia. And I think they will keep on receiving enough supply from Pakistan. Would Pakistan come for Canadian peas? I highly doubt because there are enough supplies in Ukraine and Russia, and Chuck pointed out the supplies available in that region. Dubai has been predominantly participating in the Black Sea region for their supplies for yellow peas. So I think Canadian peas making to those ports or those countries sounds a distant dream for now.
Okay, and then maybe just some further color there, more on the grower side of things, Rob. How do you see growers there progressing over the years? You know, we've seen in the past where there was a huge push to market right at harvest. We've seen less of that here in the last couple of years, somewhat similar to Canada. Do you see that continuing down that line going forward, or do you see that changing?
So that's a very good question, and there was one thing which I'd like to share with everyone. What used to happen, I think 6 months back, was all the growers especially in India, where they had to bring the produce to the market, and there was a bureaucratic system which was very slow and was not the most efficient for producers and the ultimate users. So what the government did, I think about 5 or 6 months back, is they pretty much abolished that marketplace system where now the growers are just go directly to the end users or the millers and they can sell their produce directly. So, and due to that and opening up of the whole marketplace for producers and millers, we have seen a lot of stockists, we call them stockists in that marketplace. They have come in and participated and started buying produce of the growers. So going forward, the system which was placed through the marketplace gave us a visibility, because to get information out of what's happening in India, it's very difficult because the farm sizes are very small and it's not a very organized place. Getting information of arrivals and the crops and prospects month by month was easier from these different market points, which going forward would not exist. And I think the growers, with the money flowing in by the government and the support system which they're building around the farmers through the banking channels and getting them money to store their produce and bringing logistic capacity through different infrastructure projects, I think they will be holding the cargo because the government want them to be above the minimum support price. So they'll do everything possible to make sure that they have all the infrastructure and the cash and the liquidity behind them for them to hold the cargo going forward and only sell when the prices are attractive enough for them to sell.
Okay, thank you, Rav. Our last question from the audience goes to Jeff. Just going to some of the smaller varieties in terms of acreage, maple and dun peas. What have you seen for acreage trends there, and how do you see growers marketing those products here in the next few months?
I'm wondering if anybody else can help me out on that one. Obviously, last year was a difficult year for maple peas. There was acres were up last year. I think there was a lot of maple peas carried into this crop year, so I think we would have saw a reduction in maple pea. I think we're starting to see a little bit of demand on it now, but I think there's stocks that are brought forward from last year. There will be an opportunity to market them, but I think the direction there, for me, it's a little bit unclear. I'm not sure if anybody else has specific thoughts on that one.
Rav, any color you can add to those?
Last time I tried to add color to maple peas, I didn't do very well, so I'll refrain from that.
You're using the wrong color, I guess.
I guess.
I should have taken your advice, Rav.
All right, well, with that, that is all the time we have for today. Thank you to our panelists, Rav, Kevin, and Jeff, for all of your insights. And again, once again, Chuck, for your multiple presentations on the day. I'll now turn things back over to Gordon.
Okay, thanks, Quentin, and I'll echo your thanks already given to Chuck for doing a long service here. Big thank you to Port of Montreal for sponsoring the event, and of course, Kevin, Jeff, and Rav, thank you all for being part of the P panel.